Well, Michael, Shalin, thanks very much for joining us in London this week. Shalin, great to sort of hear your insights on the panel just now. I think, and again, don't quote me on the numbers, but we've obviously experienced this unprecedented outflow of capital from the upstream E&P sector in recent years for reasons that we're all too familiar with. I think it's created a really interesting opportunity for those who are able and willing to put money to work in the space, just due to the flight of capital and tightness in the market. I think, and again, don't quote me on it, but earlier in the year we were speaking with a group of investors. They said sort of private equity groups and private funds that were closed and came to market last year were about $2 or $3 billion in total amounts, which is obviously record lows for the space. We're seeing and hearing that family office groups like yourselves are stepping in to bridge that gap, and you're seeing attractive opportunities start to present themselves in the market. Maybe you're able just to give a bit of an overview or an introduction to Wincoram and what the opportunities that you're seeing out there are.
Absolutely, thank you, man, and wonderful job hosting another fine event here. Very happy to be able to share the Wincoram story here with my partner, Shalin Shah. But I think you mentioned something a moment ago about family offices. Family offices are very, very sophisticated when it comes to the space that we're in right now, and what they see us as adding value to them is by virtue of our large institutional investors that come from the insurance world. We are seen as a type of financing source for their equity capital. Now, as Wincoram and our partnership with Starwood, we participate in the equity as well, so there's full alignment between all parts of the cap stack here. But the quality and quantum of capital that's been able to come through our platform has grown, and we suspect it'll continue to grow over the next several years here.
Okay, fantastic. And I'm interested to pick your brains, and Shalin, maybe this is one for you.
Sure.
Again, a lot of people are saying that maybe they want a bit more flexibility than being locked into a private equity fund structure. I mean, do investment structures vary across type of capital sources? If so, how do they vary? And what are the benefits of partnering with a family office group, say, versus a traditional private equity group, as we've experienced in the past?
Right. Yeah, they absolutely do vary. I think one thing that we try to offer both family offices and institutional investors is the flexibility to invest at a level that meets their risk profile. So marry the assets with the risk and therefore the capital. I also think what they find very interesting about our approach is that it's a cash flow model. So even if you're buying an asset that has a 20-year life and you take a long-term view, you'll start getting a dividend almost immediately. And that, I think, really makes it very attractive to all types of investors, and in particular family offices who can take a long-term view but don't necessarily want to have their money locked up for 20 years.
No, it's interesting. And I think, Michael, when we met in Houston earlier in the year, something we spoke about was there is increasing appetite from generalist family offices right now to increase exposure to the commodity as the sector outperforms many others, and obviously as the industry demonstrates improved capital discipline. I mean, what are you seeing in terms of, between you, in terms of appetite from generalist family offices and partnering with experienced energy investors like yourselves to increase their exposure? And where's that interest coming from? Is it the US? Is it Europe? Is it the Middle East? Or it'd be good to get some insights there.
For sure. So certainly we have access to the family offices in the US, being based in Houston, with easy access to some of the larger family offices up in Dallas, as well as New York and the West Coast. We have found family offices to be very focused and attracted to the yield type investments that they can make with us. While at the same time, the access to deals that we have are on the larger side, so any one family office might not be able to source that on their own. So they see us as an in-depth expert originator of transactions that have scale to them, and typically with the scale comes other capabilities that we have to provide a more stable return to them, and as Shalin was mentioning a moment ago, immediately. So the generalist family offices are not necessarily coming to us looking specifically for an upstream hydrocarbon, oil and gas focus. It's more about the quality of the return and our ability to tranche out the various types of risk into far more granular types of exposures, whether it's pure equity or pure debt or a combination thereof. We found to be very attractive to our investors family office staff.
Okay, and I think something that's key there, and Shalin, something you were alluding to earlier, is, I mean, again, the feedback we received from our Houston conference about 3 or 4 weeks ago is that 10 years ago, deployment was far more standardized and standard than it is now. Today, investments are customized, they're specialized, it's more case by case. Will we see a return to standardization, or is customized the way to go?
Our opinion, customized is the way to go. I think standardize, certainly has a place, but I think the more we can, conform the requirements to that of the investors as opposed to asking the investors to conform the requirements to us. I think the more attractive it is, right, and we can attract, more capital and a variety of capital to continue to invest in the industry as where capital is needed.
Okay, fantastic. And I guess finally, the last question I'd put to you would be, what's next? You obviously led the syndicate of family offices to acquire Pure West earlier in the year, which was a great deal. What's next? Where are you going to be putting capital to work? Is it using that as a vehicle to bolt on, or is it going out and exploring new opportunities, new basins?
Well, all of the above. We have some good luck and hard work that have generated a vast amount of momentum in our business. Our allocators that have come and entrusted us with their investment from deal number one through our last deal, they've stayed with us. We've added new investors along the way, and we listen to that. And what they're telling us is that they like perhaps a wider swath of not just pure dry gas investments, maybe more liquids. The larger deals that we're doing also afford us access to midstream assets. So that's another dimension to our business here as well. We're very U.S. focused right now, but there's down the line opportunities for us to perhaps internationalize our business as well. But we're going to stick to remaining, utilize the momentum we have for the existing hunting license, and opportunistically add to that and broaden the license to put much more capital to work over the next 3 to 4 years.
Okay, fantastic. Well, both look forward to following the progress. Appreciate you joining. Good chatting as always. Thanks for coming to London, and we'll keep in touch.
Thank you,
Thank you very much. Appreciate it.